All right, happy Monday. The market has caught a bid this morning. S&P is up about 2%, Nasdaq's up 1.5%. Risk on. All right, let's take a look at a few things. First, I want to go over something from Friday. Last Friday was options expiration. I had a whole bunch of spreads that were coming due. For the most part, all good, but I forgot one. So this is Hershey Food, and I had this bull put spread on there. So I wanted it to stay above that 214.70 number. And you can see on Wednesday, this thing completely collapsed. So what happened here on Friday with options expirations, I lost all my money. It happens, but that's why we put the downside protection in there. So all in all, Friday was a good day, but I forgot to go over this big loser in my portfolio. You can see here that this was a pretty big drop, right? So Hershey was down over 7%. No one was in the mood for chocolate, and it's the largest percent decrease since March of 2020. All right, so on Friday, the market came all the way down, and I went over this chart before. Here's the head and shoulders formation for the S&P 500. Here's the top of the head to the neckline, and then we were saying, okay, well, the drop in the market should equal the distance between the head and neckline, which was around, call it 38, I was saying 38.20 to 38.50. Also take note that the Fibonacci's off of the 2020 lows was also sitting around 38.20. If you take a look at the weekly chart of the S&P 500, this is the 2020 lows, and you can see here on the weekly that 38.20 represents about the 38% Fibonacci retracement number. So I thought 38.20 was a pretty solid number, so I decided to go ahead when it hit on Friday, and I bought some calls in the SPYs. All right, so here's what we did. We bought the June 10th 385 strike calls for $9.85. This was late Friday, and then this morning we came in. We had the bid up in the market. I ended up selling half of that position for $14.51. It's about an 80% return. Then later on in the day, I sold another 25% of the original position for about $15.68. That represents about 100% return. And you can see here the market is going higher still. So this position's up about 116%, the remaining portion of it. I'm going to wait till around 2 o'clock or so. I want to get an idea where this market's going, and I may just let this ride, but I'll have a better idea this afternoon. All right, so oil is up, looking at around $113 a barrel for Brent. Here's ExxonMobil. We put this the bull called vertical on it, expecting this thing to go higher, which it has, and it's above our threshold here, which is 93.40. So I took half off. So you can see here on the 13th of May, we had sold the July 15th 95 strike for $265, and then we went ahead and we bought the July 15th 92.50 strike for $355, and today I unwound half of that position for about a 50% gain. Okay, here's Autodesk. Autodesk is down about 5%, but it was down much more earlier in the day, and we went long the puts here, so I took the profits on these. So with Autodesk on the 16th of May, I went ahead and I bought the May 27 puts, $190 strike price for $8.54, and today I unwound position for $17. Represents about 100% gain on our money. I'll take it. All right, 2 new trades that I got through today. I still have a couple of pending, but these are the ones that got done. So Honeywell, I put the bear put vertical on this. You can see this thing has kind of been in a downtrend, riding its 50 and it's 28 down. The 20 is below the 50. It's right here in this consolidation phase. I saw an interesting article today. So if you take a look at this, option volume is out of the ordinary for Honeywell, right? It's led by the June 17th 180 puts. So big option activity. I decided to go ahead and put this position on. What I did here is I sold the June 17th 185 puts for $3.55, and I went ahead and I bought the June 17th 190 puts for $5.40. Kind of flattish on the trade today, but I am anticipating some near-term weakness in the name. This is Take-Two Interactive, the gaming company. It's been in a lousy downtrend, as mostly everything else in this market, but you can see here the 20's below the 50, they're trending down, the market's just in a downtrend. It had this big pop on decent volume, and it's kind of running into some overhead here. There's a lot of overhead all up in here, so I don't really see this thing changing its trend. So I went ahead and I went long puts on this, anticipating that this thing is going to at least retest its lows down here in the green area. So on or before expiration, I needed to trade below 113.50 It's trading at 121 and change right now, so we'll see what happens over the next couple of weeks. Went ahead and I bought the puts. These are the June 24 puts, $120 strike price for $6.50. I'm down a little bit in the trade today, but again, I think it's got a lot of overhead. I think there's going to be a lot of downward pressure in the name. So, and I also want to increase my downside exposure in the portfolio. As you know, all month we've been taking profits. We went into the month so heavy on the short and downward bias that I had no choice but to take profits all the way down. So we have a good month, but I'm really exposed to the upside. Granted, we're having a good day today, but we're in the middle of a bear market, so I'm ready to start fading some stuff into the rally. All right, that's all I have for today. Stay tuned. Thanks. Happy trading.